All right, everyone. So now we again pretend to be a business show, and we're going to focus on the big 400-point rally in the stock market today, all across the board, all the indexes up. According to traders, the rally is sparked by the growing likelihood of a debt ceiling deal that will include major budget reforms, whereupon Joe Biden is now negotiating directly with Kevin McCarthy, and the deal will be an increase in the debt ceiling tied to major budget reforms. Okay, that's it. I'm calling it McCarthy 10, Biden 0. Now, here's what Speaker McCarthy said yesterday about all this.
It's possible to get a deal by the end of the week. It's not that difficult to get to an agreement.
And here's what the Speaker said this morning about it.
Am I optimistic? I'm optimistic for America because of the people standing behind me. I'm optimistic of our ability to work together.
All right. By the way, new polls show McCarthy is the most popular person in Washington, D.C., the only politician with a significant positive beating his negatives. Anyway, if it's true, the market's watching this very carefully. I don't know if today's rally was about the debt ceiling or not, but that's what traders are saying. Couple things I am watching, though. First of all, is this going to be a one-year debt deal or a two-year debt deal? GOP wants a one-year deal. Biden wants 2 years, so it won't interfere with the election. Another point, is it going to be a 2-year spending cap or a 10-year spending cap? The 10-year cap is worth $5 trillion. I would say yum, yum to that. Also, permitting reform does look good for energy. COVID clawback looks good. But Joe Biden does not want work requirements on Medicaid. The Republicans do, and I think they are right. Also, nobody's talking about student loan cancellations. The GOP wants to end Biden's student loan cancellations. And I think Biden is completely wrong on this. McCarthy right for a variety of reasons, including personal responsibility. But by the by, it's worth $500 billion, maybe more. And then final point, the X date, so-called X date, could be sooner than June 1st. Revenues coming in short. Treasury may not have enough cash. Although I got to tell you, I still believe this story will be manipulated to suit a Biden-McCarthy deal agreement whenever it happens. But they will need 60 votes in the Senate, and they're going to have to be working Memorial Day weekend. Fellas, boys and girls, you're going to work for this. Remember, work is a virtue. So are work requirements. And we may see it with our elected representatives, or one can only hope. Now, to comment on all this and much more, and review the current state of America's life, liberty, and the pursuit of happiness, we bring in the great Kevin O'Leary, chairman of O'Leary Ventures, Shark Tank investor, and author of Cold Hard Truth on business, money, and life. Kevin, pleasure to have you back on set. The debt deal, is that driving the market up today? What do you think about this whole story?
I think we're going to get a debt deal, obviously. We've seen this movie so many times. I don't know how many bells and whistles get included, but the market went up for 2 reasons today. The likelihood that this ceiling gets raised is close to 100%. But also something's happening that I think the market's getting intrigued about. We've never had a soft landing in such a rapid rate hike cycle. I think there's over a 50% chance we're going to end up in a soft, very soft recession. And, you know, businesses in America now are trying to just juggle 2 things. Full employment. We're still at full employment. You cannot have a recession at full employment. So either we start firing a lot of people a lot faster, or we're not going to have a recession, or it'd be very soft. But the other question that's intriguing, you saw the numbers from Target. You know,
yes.
You see the consumer hanging in.
I thought that Target thing was a big factor today.
I agree with
you, Larry. Could be more than the debt ceiling.
And now the dilemma for every business in America, including mine, is we talked about it today. How much capital do we put into inventory for Q3, Q4? Everybody's telling us the consumer is going to roll over. We don't see it on the daily, weekly numbers. We didn't see it in Walmart. We didn't see it in Target. They did pretty well for a so-called crash landing we're supposed to be getting. I think we're in a really interesting place. I think the market realizes it too. Capital is coming back into equities. And even if the Fed doesn't decrease rates in the back end of the year, these are not historically bad interest rates here. Right. They're not crazy.
5% funds rate. I mean, right, we had that in the 80s, of course, rates came down a lot, but the boom in the 80s and the boom in the 90s had 5, 6, 7, 8% rates.
Yeah, and the thing people have got to be thinking about is the market in the regional banks have completely dried up loans. Now, Haggerty has an idea for that. I went to Washington yesterday to see what condition my condition was in. That's what I like to do when
Haggerty's coming on, by the way.
And I heard his idea. I like it. It's a very simple 18-page bill. He said, look, let's just guarantee for 24 months, basically payroll. He'll give you $100 million guaranteed in an account that has no interest. Now, nobody puts money in a no-interest account unless it's for payroll. So that's probably 90% of the capital. It's a good idea. It's a 24-month fix. It gets everybody cooled off. I like simple bills. I like pragmatic, simple bills. That thing might actually get some traction.
Can we talk about your favorite subject, regional banks and Silicon Valley Bank? So their former CEO, Greg Becker, is in Congress. He's testifying. Now, it's very interesting because he made a point. I want to get your take on this point. He blames the Fed for part of his demise because, he said, hang on for a second, the Fed gave, first of all, we had zero interest rates, 1/4, 1%, but the Fed gave forward guidance, quote unquote, and it sort of sounded like we would have zero interest rates for a long time, and then, oops, they discovered inflation, and then, oops, in 1 year, they raised their target rate by 500 basis points, which crushed the banks. The banks were accumulating capital in the form of government loans, mortgage-backed loans, government bonds. So he blames the Fed. Now, I don't want to let him off the hook because I think this was a rogue, woke bank to begin with.
That's not going to happen now, Larry.
He's got a point, doesn't he? I mean, these guys did listen to the Fed. The Fed gave them a misdirection. The Fed was wrong, and then they completely reversed course, and they did it viciously.
Let me take the other side of that, okay?
I'm not, this is not my point of view. I'm just saying this is what he's arguing.
It's a point of view, and here's the counter to that.
Yeah.
So in Banking 101, when you go to get your lesson on banking and you're going to be a bank CEO or you want to run a bank, there's only two things you have to know. Just two things, duration and quality. On everything in your day is duration and quality. Everything you do, whether you put it out on the loan book to individual loans or whether you buy assets with your depositors' money, duration and quality. You would think that would be drilled into your brain. That guy gets an F minus, another F minus, and if you can get a third and fourth, I'm giving him all of that because every one of these bank managers says, oh my goodness, rates went up. Well, no beep, they went up because inflation started. If you look at the long-term cycle of rates, this has been going on since the beginning of time, since they rolled out the first Roman coin. And if he doesn't understand that, he should get the full sledgehammer that he's getting fried like a chicken up there.
Yeah.
And then they're going to put him in the microwave and fry him again. And Elizabeth Warren, I listened to her. My goodness, she wants to put him in the oven after the microwave. So he's having a really bad day, I can tell you that. It's not going to get better.
Is the so-called regional bank crisis, is that over yet?
No.
Heck no.
I think if Haggerty gets his bill through, he'll just slow it down. We're going to consolidate these 4,500 over the next 5 years to maybe 800 super regionals. There'll be an imputed guarantee if you get big enough, just like the major money center banks have. There's no way we're going to stay with 4,500 branches. No way.
I got to get out. The great Kevin O'Leary. Thank you. Are we still going to North Dakota?
We are going to North Dakota.
North Dakota. Let's announce that. All right.